Okay, my apologies for the delay. Now let's get started with our second question in this paper. This is the second case study that we have in this paper, Guillermo company. So this is the case study given to us, and here we have the requirements. So the very first requirement that you people can see on your screen is that you have to calculate Guillermo company's cash operating cycle. Before I start discussing that, I would just like a quick confirmation. Am I clearly audible and visible, and the screen, everything is visible to you properly? Somebody has commented no sound. Can you now hear me well? I fixed the audio issue. Is it now coming fine to you? Is the audio clear now? Please give me a quick confirmation so that we can get started. Perfect. So we begin now. Thank you so much for confirming. Again, like the previous time, it's not letting me enter my answers here. So what we will do, I've done previously for you, is that I've copy pasted the entire question as well as the requirements over here on my Excel file for all of you. So here we go. Let us first see the very first requirement, because this is how it's going to be visible to you in your final exam. So you will be able to see the very first requirement along with the entire case study at a glance. So you can see that the first requirement is wanting you to calculate the cash operating cycle. Now with this question itself, you will understand that this section C case study is based upon the working capital area of our syllabus. So let us read the scenario. Guillermo company is a medium-sized company that manufactures a single product. Let's read from there itself so that we'll know how to locate where the information is. The product should only take 2 days to manufacture. Figures from its most recent financial statements are as follows. So you have the revenue, you have the inventory, raw material, work in progress, as well as finished goods. Then you have the trade receivables as well as the trade payables. So we have all of the information that we need, which will help us calculate the cash operating cycle. Let's read further. Credit sales account for 75% of the total revenue, and Guillermo company's gross profit margin is 60%. Guillermo company has a large number of credit customers, but there is no separate credit control function, and chasing of overdue debt is left to the relevant customer's account manager. The finance manager considers this to be satisfactory to enable the finance department to concentrate on more important aspects of the business. Standard finance department to concentrate, standard credit terms for credit customers is 30 days, and no credit accounts are currently suspended. All customer account managers are paid a bonus on the levels of sales achieved. So there is a red flag that you see over here, that account managers get a bonus on the level of sales. So that means they will try to sell more and more of goods possible without thinking twice about when the customer will actually pay money. Is the customer even worthy of giving so much credit, right? And then you move to purchases. Raw material purchases in the year totaled this much, and 90% of this was purchased on credit. Raw material is the only supply Guillermo company purchases on credit. Guillermo has always tried to maintain good supplier relations, and the average credit term from suppliers is 35 days. Now you have some information relating to cash management also. The management of G company has decided that it wishes the minimum cash balance to be $40,000, but the cash balance is volatile with a standard deviation of $15,000. Then you have that if extra cash is needed, then G company will sell tradable securities from an investment portfolio that they own. Transaction cost for a purchase is same as that for a sale. So this is the given assumption that we need if we have to apply the wormhole model. So it's good that it's holding true for them. $55 per transaction is the transaction cost. Interest rates are given to you in annual terms at 9% per year, and you have to assume 360-day year for all of your calculations. So this was the question. Now, the very first requirement wants you to calculate the cash operating cycle. Now, we all know the formula for cash operating cycle. You have to basically add all of the current assets. So, you will add the inventory period, you will add the trade receivables period, and you subtract all of the current liabilities. That means you will subtract the trade payables payment period. So, let's get started with our working. Firstly, we will require some numbers. Let us first calculate the trade payables period. That will be very simple to calculate, no further calculations needed. So, if you talk about the payables payment period, so the formula that we have learnt is we are supposed to take the trade payables amount. The trade payables amount is directly given to us as 162,000. That needs to be divided by what? That needs to be divided by your the reason why the payables are there. That means you have done purchases. So, purchases you have done on credit, that is why payables are standing. So, you will take 90% of 2160. So, I am removing 3 zeros by default. So, that means I will be removing 3 zeros over here also, and you put this entire thing in a bracket and you multiply this with 365 to get your answer, or 360 because that is given in the question, to get your answer in terms of days. Now, we have calculated the payables payment days. Let us talk about the receivables collection. So, receivables collection period is going to be receivables in your numerator and denominator being the reason why you have receivables. So, you have receivables because you have made your sales on credit. So, first of all, let us take the receivables amount. Receivables amount is directly given to us 850. This needs to be now divided by the credit sales. So, we are given with the total revenue of 6,000 and we are told that out of this revenue, only 75% of our customers are credit customers. So, again you will put whole brackets and this needs to be multiplied by 360. So, this gives you 68 days. That means you are taking 68 days to collect payments from your customers. Now, we will talk about inventory. Inventory in this question is divided into in its full 3 parts. Firstly, we will talk about raw material, then work in progress and then finished goods. So, raw material, let us calculate for that. Firstly, how much are the raw material that we hold with us? This is given to us as 120. Now, this needs to be divided by how much raw material purchases we have done. So, it is mentioned that entire purchases we do only of raw materials on credit. So, we will only take the purchases which pertain to raw materials in our denominator here. So, it is going to be nothing but 90% again of your credit purchases, which are 2160,000. Again 3 zeros we are supposed to remove. So, this is, you will again put this into brackets, multiply this with 360 to get your final answer in terms of days. So, that means it is roughly taking 22 days. My apologies, instead of taking only the credit purchases, we are supposed to divide it by the raw material purchases. So, we will not take 90%, we will use the entire number of 2160 because we have to, when we are calculating the inventory time frame, we will take the purchases, we will take the raw material amount divided by the total purchases. So, the total purchases are given to us, which is 2160. So, this is what we will be using over here. Now, coming to the next component of inventory that we have, which is trade receivables. So, trade receivables are also, you have work in progress. So, work in progress also we have the amount given to us as 20. This needs to be divided by, you are going to calculate the cost of sales over here. Work in progress always gets divided by the cost of sales if you do not have any percentages given to you. So, you are going to calculate cost of sales. How will we do that? It is saying that the gross profit margin is 60%. That means if we do a sale of 100 rupees, we make a GP of 60%, that 60 rupees. So, that means the cost is 40. So, basically you can simply multiply this amount 6,000 by 40%. So, this gives you your denominator. You can close the entire brackets, multiply this with 360 to get to your final answer, which will be 3 days. Now talking about the finished goods valuation is given to us as 80. This needs to be divided by again your cost of sales. So we are going to take 0.4 of the revenue, which is 6,000. So you close these brackets, again start a new one from scratch. This whole will be multiplied by 360 to get to your final answer of finished goods of 12 days. Now you have your receivables with you, you have your payables with you. You can also work out the total for inventory. Total for inventory is going to be 20 plus 3 plus 12. So this is your total for inventory, and then now you can finally calculate the cash operating cycle. Cash operating cycle is going to be, the inventory is going to be added, receivables collection will be added, and then the payable days will be subtracted. So this gives you an answer of 73 days as your cash operating cycle. So if you solve this all correctly, you will get the entire 5 marks which are available to you. Do not forget to add days over here. 73, you've gotten the numerical answer, but what does it really mean? It means that if any business is purchasing raw materials, processing them, and then finally selling the finished goods to the customer, how much time does it take for the customer to pay back to you? This is the entire cash operating cycle of 73 days. Yes, HS, there will be a live stream for PM as well. Stay tuned for that. Okay, so this is the first requirement solved. The second requirement is a discussion based requirement. It tells you to discuss 3 ways in which they can reduce their cash operating cycle. Now cash operating cycle, see, the formula is right in front of you. What all do you add? You add everything related to inventory as well as receivables. So if you want to decrease, if you want to reduce the cash operating cycle, there are 2 ways. Either the things that get added to it, you should reduce those, or either the things that are subtracted, you should increase the amount you subtract. So basically, if you increase the payables payment period, you will be able to have your cash operating cycle at a lesser number because you subtract the payables payment period. So how can we reduce our cash operating cycle? There are multiple ways that we can do that. Firstly, we saw that they do not have a very good credit control system. So the very first recommendation that you can give them is improve credit control. So please remember that here it is going to be very important that you link your answer to the scenario. The reason being, they have mentioned the name of the company in the question. That means they want you to specifically answer for Guillermo company. So your answer should be tailor-made for them. If you do not link your answer to the scenario, you are not going to be able to score the passing marks also. So the very first thing that you will tell them that you should improve your credit control. You will say that your customers are taking 68 days to make the payments. That's a very high number. You are given the customers, the standard credit terms are 30 days. So they are taking more than double the time that you are allowing them to pay, which is a very high receivables collection period. You should start chasing them. You should start putting responsibility towards the customer account managers, that if you are doing so many sales on credit, you're also responsible to bring the money back to the company. You should not just be making sales for your own bonus purposes. You should also ensure that the customers are paying on time. Then what else can you do? It is mentioned over here that this product takes 2 days to manufacture, but when we see the work in progress days, we see that it is 3 days. That means instead of taking 2 days, people at your company are taking 3 days to manufacture the goods. So they should improve the efficiency of the process. So all of the points that are given to you in the question, see, this is all there to help you link it to the scenario. Why did they give you the information relating to the credit customer days? They are taking 30 days, the standard terms are 30 and they are taking 68, so that you can link your answer to the scenario. Many times PM and FM students come to me and they tell me that, ma'am, how are we supposed to link it to the scenario? If we write general answers, we do not end up getting marks. So how exactly do we link our answers to the scenario? And I always tell them that whenever you're solving any section C question and the requirement pertains specifically to the company, you will always be provided with ample information that can help you link your answer to the scenario. So same is the thing here also. Why did they tell you? There was no need for them to tell you that it takes 2 days to manufacture the goods that they make. But still they told you, because this will help you frame your answer further, because their work in progress is taking 3 days. Ideally the product should only take 2 days to manufacture. So you will tell them to improve their process efficiency. Then raw material they are keeping with themselves for 20 days. So if they minimize this, then this can be minimized, and then this can also be minimized. So you will tell them to reduce the raw material holding period if that is possible. So you will tell them that currently you hold 20 days the raw materials. So if your suppliers are reliable, you should consider holding lesser raw material inventory with you, so that the the inventory days can fall down. Then what else can you do? The question asks 3 points. I've given you 3 points, but I'll give you more just to tell you what all you can include in your answers. Another thing is the trade payables. So we have spoken about receivables in terms of credit control. We've spoken about inventory in terms of raw material. Now we come to the third aspect of working capital, which is about current liabilities. So we talk about trade payables over here. Trade payables, as I told you, this is what you subtract. So if you subtract a higher amount, you will be able to reduce your cash operating cycle. So how do you increase trade payables? You should start asking for credit from your suppliers. You should request that, please can we pay you in some more time. So this will further help you better reduce your cash operating cycle. So this is what you will explain for these 6 marks. Now I will head to the next requirement. The third requirement is that you are supposed to use the Miller-Orr model, and you are supposed to calculate the target cash balance for Guillermo company. So Miller-Orr model, I hope that you people remember the formula. The formula for that will also be available to you in the ACCA FM formula sheet. So on your exam day also you will get a similar sort of a working space. So the formula sheet will also be available to you, and here is the Miller-Orr model formula. So we will first use the information that is given to us. We were given the daily variance, the daily standard deviation of 15,000. Now if you people don't know that variance will always equal to the square of your standard deviation. So the formula requires us to use variance. So we will calculate the square of standard deviation. So this gives us this much per day is our variance, and then we are supposed to take the daily interest rate. So 9% is given for the whole year. If I want to convert into daily terms, I can simply divide by the number of days. So each year has 360 days. That means this is the daily interest rate per day. Then the next thing that we need is the transaction cost. Transaction cost is also given to us as $55. Now we can simply use the spread formula. So the spread formula is, you have to multiply this whole figure by 3. Let's first calculate the numerator. Numerator is supposed to be 3 by 4 into transaction cost into variance. So I am first calculating 3 by 4 into variance into transaction cost. So this is my numerator. This needs to be divided by the interest rate. So I divide this by the interest rate. This is my whole final answer, but I have to still raise it to the power of 1 by 3. So I will do that. Here I have selected this and I raise it to the power of 1 by 3. So here I have this, and then finally I have to multiply this by 3 to arrive at my final answer, which is going to be $100,000, roughly $100,080. So this is my spread that I have calculated. So if you know the spread, what exactly did you have to calculate? You have to calculate the target cash balance. That means at any point of time, how, target cash balance is nothing but the return point. So for the return point, you have the formula given to you, lower limit plus 1/3 of spread. So lower limit is the minimum balance that they want to maintain at any point of time, which is $40,000. So you will say that the return point, or you can use the requirement, what the requirement is telling you, target cash is you are supposed to take lower limit is 40,000 plus you need to take 1/3 of spread. So 1/3 multiplied by, this was my spread. Again, I will close this into separate brackets so that Excel does not mix my calculations. Okay. So this is what you will get, 73,000, roughly $360 you will find as your target cash or your return point. Now with this, we are done with the 3 marker requirement also. Let's now move to the very last requirement, which is to discuss the motives for a business to hold cash. Now this requirement, I would say, the examiner has literally packed your gift with a beautiful wrapping paper, put some nice bows on it, and has given you 6 marks literally for free. It's a gift from the examiner. Why am I saying that? Is because this is a straight theoretical discussion based question which often gets repeated. So if it comes up in your exam and you are not able to answer this, you should not be cursing the examiner, why did they give this? You should rather curse yourself that why did you not prepare for this when this is such a repetitive requirement in the exams. So we have learnt in our concepts that there are 3 primary motives why a business holds cash. Firstly, businesses hold cash for the transactions motive. Transactions motive means that the business will be holding cash for the daily basic payments, paying the suppliers, buying raw materials, paying salaries. So this is the transactions motive. Next thing that you know is the precautionary motive. Precautionary, as the word suggests, it's for precaution. So if any sort of emergency comes up, maybe they are stuck in some legal case and the court has announced a penalty that they have to pay. So there is some cash that the business is always holding for emergencies. And the last but not the least is the speculative motive of holding cash. What do you mean by speculative? It comes from the word speculation. Speculation means when you are holding something because you're thinking its value might go up. So here you're holding cash because you might be getting any opportunity wherein if you do the investment right now in cash, you will be able to get good returns. So some cash businesses keep for the speculative purpose. That means if any good opportunity for investment comes up, they will use that cash to go ahead with that particular investment. So these are the 3 motives that a business holds cash. You're going to explain them properly, 2 marks each you have for them. So explain them properly, thoroughly. The content for this you will easily get in your, wherever you've studied from, BPP, Kaplan or Study Hub. So use the content from there, and I would suggest that you memorize this because this is a very repeated question that I often see in the exams. So this was the entire Guillermo company question for all of you. Let me know if you have any queries. If not, then we can conclude the session over here. Okay, so I do not see any queries. For the ones who watch this later, you always have the option to comment down below to ask your query, or also DM us on Instagram at BeingACCA. We always reply to all the queries that you ask us. So this was Guillermo Company, and with this you are done with practicing the September-December 24 exam. I wish you all the very best for whenever you are attempting the ACCA FM paper. Thank you. Bye-bye.